Hi there, Stephen here from Forex Wealth. Today's lessons we're going to be going through the actual trade setups for the dashboard correlator and the trend volatility indicator. First thing we want to look at is the actual screen setup. What I like to do is have the dashboard correlator as the central figure in the trade setup, so you can reduce your screen size of the correlator by doing the following. Right, you just go into the actual correlator over here, and there where it says font size, you just make that a smaller number. It'll actually compact the output so that you can fit everything into one screen. Okay, so what you want to do is you want to have maybe 4 other currencies or pairs that you're looking at trading. I wouldn't suggest that you go for more than that because it's just going to confuse you. So the main aim of this is to see exactly what's going on with the 2 indicators. So you're watching at a global perspective on the dashboard correlator here, and then the individual movements on the currency pairs over here. Next is market times. It's very important to choose the correct market time to actually look at trading, and in my experience the best time to trade is probably from the just before the Frankfurt session for the next, say, 3 or 4 hours going into the London session. The next most profitable trading period is the overlap of the US and the London session, the first sort of 3 hours of the US session. So just bear that in mind. When you also have to look at the fundamentals and how news is going to impact on your possible trade. So you need to know when fundamental news is coming out, and you want to have an overall perspective on the news. So you just need to spend maybe an hour a day updating yourself on the various headlines, what's important news reports are being released, what the impact is, and when they're going to be released. A good source for this is forexfactory.com. I also use Trade the News, which is a live up to the minute trade broadcast of all the current fundamental news that's coming out of the markets, and it gives you breaking news when the reports come out, exactly as the reports come out. It gives you all the various information, so it's a very handy tool to have. The other one that you might want to look at is RTT News, real-time trading. It also has this handy little application that you can put in your tray, which pops up with all the news events. And just a little note on fundamentals, whether you like it or not, if you're just a technical trader, you will be impacted by the news. So it's in your own best interests to have a general understanding of fundamentals and what impact it could have on your trade. You don't need to be a guru, but a general understanding. It will vastly improve your trading, I assure you. The most important part of your trading is the actual money management side of trading, and there's a nice little tool here on www.mataf.net. Click on Tools, Charts, Risk Management, and Position Sizing. You'll come out to this tool over here. You just input the various information. You put in the amount of percentage risk that you want to take. I would recommend no more than 3%, and on average stick to 1%, the amount of pips that you're going to risk, and then it spits out the position size that you should be using. Before you place a trade, very important that you run through this. So work out how many pips your stop loss is at, and then work out what your position size is. I can tell you now that this is the most important part of your trading. More important than the actual system or anything. This is the thing that's going to save your account. I'm going to be doing a separate video on this later on. Okay, let's just move into the actual settings that I use on the dashboard correlator. What I like to do is in the mornings when I set up, I put a 5 minutes on the graph over here, time frame 1, with a look back of 15. I then go down to the heat map and I put in a 1, a 5, and a 15 minutes activate true on the heat map, and then activate the 4 hour and the 1 hour for the general the trend of the market. So if you're trading with the trend, that's what you've got to be looking at. Okay, on the trend volatility indicator, all you need to do is attach the template. So you got a TrendVol there, attach it to your chart, and it will then bring this up. I normally look at a 5 minute chart, depending on the ranges and that are trading on any specific given day. If there's more volatility and it's whipsawing around, I'll go to a longer 15 minutes, but normally a 5 minutes quite good on the open for Frankfurt and London to get you in and out of the various positions that you want to get into. Alright, now as far as your setup's concerned, what you want to be looking for is some form of consolidation just prior to the important sessions that I've mentioned. So you look for that consolidation, the inside bars that are forming, and you're then looking for some form of breakout on those. I'll show you the inside bars and how they work now. Right, so here's a chart over here with the relevant inside bars. I'll just give you a quick overview of what an inside bar is and how it works. Basically, what an inside bar is, it's a sign of indecision with the current trend, or it's a consolidation prior to a breakout. So essentially, it's a pause before the next move, whether that move is a continuation or a reversal. So it's normally used on higher time frames like 1 day, but I found that it can be used on smaller time frames just as effectively. So this specific inside bar method we're using is inside bar smallest of 4. So as you can see here, the software will activate that the inside bar. You do not have to go and look and search for where these inside bars are formed. The bar just prior to the inside bar is called the container bar. That bar engulfs the inside bar. What you do then is you draw a horizontal line on the wicks of the candle, the highs and lows of that candle, and that will tell you or indicate the areas of breakout. Okay, so here we're trading with the trend, so we use these trend arrows over here, and we're looking for a short. You then enter over here, it breaks through this line over here, and you would place your stop about 5 pips above this the higher point of that container bar, with a minimum of 15, maybe 20 pips on the euro yen and pound yen. If you're going counter trend without this trend reversal over here, the arrow, you then should reduce your position size or risk to say 0.5%. The safe entry would be to wait for the dashboard volatility index to indicate to you, give you further confirmation on the entry, and you're looking for levels above 150 to 200 on the 1 and 5 minute time frames. I'll show you that on the next slide. So here we have the 1 and 5 minutes that we're going to be focusing on, and you'd want to be seeing levels of 150 and above, and here we're seeing the 150 lower, selling off on the pound over here, and the pound and the yen and the US dollar appreciating, getting up to those levels. What you also want to be looking at is the correlations. So just generally speaking, what happens is when markets are selling off, either the US dollar or Japanese yen or both would appreciate, and vice versa. When markets are up, yen and US dollar are down. Right, so on the smaller time frames, you're looking for those values either way to give you an indication and that really in conjunction with the trend volatility indicator will give you your safe entry. Right, your exit would be wait for the next inside bar to form, or if you're taken out obviously on your stop loss, which would be up here. Inside bar is formed, you then draw your lines on the container bar, and your first exit in this case would be over here, anything above that top of that wick there. That's not the safest exit, but it's your first exit. The better exit would be over here when this trend arrow changes to long. It would be over there. Plus again, it's read in conjunction with your trend with your data. So you'd be looking for a reversal over here on the smaller time frames. That'll give you your first indication. So when you start seeing figures on the 1 and 5 of say 150, 200, 250, then you should be looking at exiting your position when it's reversing. Okay, here's a 15-minute. Same thing applies. Inside bar breaks down. Another inside bar is formed. It's a continuation because it didn't break up there. Carries on down. Another inside bar is formed. Draw your lines on the container bar. The here it reversed, so you would be exiting there. First point, second point would be when the arrow reverses over there. And the same goes for a daily chart. Same principles apply. Inside bar, draw your horizontal lines, look for the breakout in line with the trend. There's your trend reversal arrow, and continuation here, and a reversal there, so you'd exit. And the same can be applied to your scalping 5-minute charts. The same principle applies, so it's a very versatile system. Okay, this concludes the presentation. This will give you a very good grounding on how to enter and exit using the dashboard correlator. We'll be going through a lot more examples, and as you work with it, you will see how effective these two indicators are used in tandem with each other. That's all for now. Speak to you soon.